Hey guys, yeah, I think everyone can hear me right. So let's start. Henrique, can you just try your mic there so we know you can hear us and we can hear you?
Yes, yes. Hello, everyone. Are you listening?
Yeah, I can hear you. Yeah,
Perfect.
guys, yeah, people are already sending texts. So yeah, thanks a lot, guys, for everyone who already joined. Um, this is Henrique. He's one of our investors from the pre-seed round. He's a former director of ODC and Treasury at one of the largest centralized exchanges from Latin America. He has more than 20 years of experience in cross-border arbitrage trading. Um, and one of the great things that I love to talk about when we talk about Daros and everything we're implementing in the product is getting his vision in terms of what he values, what he looks for when he's trading on DEXs. He's been starting his journey in DeFi in the last year, so it's great to see how how it's different, the way his mind and what he looks for in indexes uh, is from people that we talk daily. So, Henrique, do you want to introduce yourself, give some more context about you, and present yourself for the audience before we start?
Yeah, sure. Uh, so I started back in the 2003, sorry, 2003, in São Paulo, Brazil. I started working for a small broker dealer, a US broker dealer that was based in Brazil, as back office for the prop desk, and then later, a year and a half, so I was promoted to the prop desk itself. So it was a big deal for me because I really want to do the trading activity. I think many of you guys also thinks the same, right? Wants the same that the live on trading, right? Activity is I don't know if today is like being an Instagrammer or something like that because
You're one of
became
the cool
so
kids, right?
emo activities that I don't know people idealize trading as a way to live as a rich guy, right? It's not exactly like that. It's a lot of it is really tough. But so back in 2003, I started on the trading side. I started working with arbitrage between Brazilian stocks and the ADRs that trades in the New York Stock Exchange. So my background mostly is on the traditional markets. And since then, I'm doing arbitrage basically, right? I do some directional trades, long and shorts, and this and other directional, more risky trading activity. But I really love the arbitrage because it is a way to make revenue steadily over the years, right? Which is the main purpose of trading. And so after that, in long to be a long story short and was working for a Brazilian broker dealer, one of the largest broker dealer in Brazil, if not the largest, doing the trading. They start to in 2017 to launch their own exchange. I was head of the trading market making that exchange back then. So when I start to learn about crypto, right? So 2017 was my first year on crypto. Since then, I was always working with because it's a crazy world, right? It's ups and downs, really strong. So I was learning, and then I was the director of OTC and Treasury in the centralized exchange in Brazil as well. And now I'm back on soul trading, right? So it's a lot of things on the career, right? So, but it's a lot of learning. Uh, I'm really happy to share a little bit of my experience here today.
Awesome. Yeah, that's great. Thanks a lot for the additional context. Um, I think that the first question it's a little bit more basic, so we can um, start. So for I imagine that we have like several different levels of expertise from the traders that are listening to us. So can you start by differentiating, like provide a brief explanation of what are perpetual contracts and in the context of crypto, and what's the main difference for like traditional futures contracts in traditional finance?
Right, right. It's really interesting because perpetual futures was created by BitMEX back in 16, right? Was really really interested on of the works of the perpetual futures back then, and got so many popularity, right? But there is a big difference, and I think that the mechanism behind it make it so popular. The in the traditional market, future has an expiration date, right? So what do you have? Okay, you have an index that is traded at 100, and then you have components like interest rate, future, and volatility until the expiration date, right? So let's say in 3 months, and the future is going to trade at 101, right? Is the index is 100, the future is 101. So you have this $1 difference between the cash and the futures, and this at the expiration trade at the same price level, right? And basically, if you want to do an arbitrage, you're going to look at this curve of interest that is implied in the futures to trade buy and sell futures versus the cash index. The perpetual make this more daily trading, right? As I said, you have a component which is the funding rate. This funding rate is used to basically to find arbitrage guys in the market, right? Another arbitrage guys, they are looking to capture this funding rate and make it a profit, right? So if there is a lot of people buying futures, perpetual futures in one exchange, this funding rate tends to increase. Increasing funding rate attracts arbitrage guys to sell the futures and buy in another exchange, another DeFi, another DEX, right? Or sell the underlying, right? The crypto itself, right? So this becomes really intense of trading activity. So the mechanism makes you buy and sell as an arbitrage guy much more intense than regular futures, right? Because this tends to because futures in the retail market, the people trades for a day, right? It's 1 day, 2 days, and that's it. It's really short-term trading. So the flow of massive flow of buying or selling tends to unwind really fast. So you are on the other opposite side, right? As soon as the start to increase, you sell the funding rate, and then when start to decrease, you buy back and close your position. So makes increase the liquidity of the trading, and you also have the price difference between the underlying. Let's say you have a perpetual trading in Bitcoin. The price is 38,000. I don't know exactly the price where the price is now, but let's say that 38,000 is the spot trading, right? The cash one. And then you have the perpetual futures trading at 37,950. It's at $50 below the spot price. You can sell the spot, the cash one, buy the futures, and wait for the price to stabilize. If it goes to 38,000 again, I sell the future, buy back the spot one. This is another way of trading as well. So perpetual futures, this is the biggest difference. There's no expiration. It's continuous trading, and obviously gives leverage for directional trades as well.
Yeah, that's
I
great.
think I hope that was a good explanation.
Yeah. It was great. Like the short answer is basically the difference is you don't have a time limit, but your expanded answer is better because people can understand like, okay, what are the parameters that I should take into consideration? For example, um, hedge strategies like you mentioned, like buying the asset you're speculating on
Mhm.
spot, so you have a hedge opportunity. You can also use buying options as a hedge strategy for opening futures. So yeah, that was a great explanation. And going into that aspect, I wanted to ask you, as I already know, your background is in high frequency trading and arbitraging. I think that most people probably don't know. I know that some people do, but it's good to explain. High frequency trading and arbitraging is not like necessarily a different kind of trade. It's the strategy, right? So how do you apply that to
Mhm.
trading futures and how has it been your experience since you started arbitraging in perpetual futures DEXs um, compared to centralized exchanges?
Yes, explaining a little bit about HFT, right, the high frequency trading. It started in the traditional markets, right? Because you have the exchanges start to get more and more automated trading. So to be better connected, they created the co-location, right? The co-location basically is the where you put your server. You go there manually, install a server, and then you connect it directly to the exchange, and then you have the lowest latency possible to access the market, right? So it became with FPGA boards, and then engineers programmed the FPGA boards, and the best code possible, right? The smaller code, saying like that, with the minimal lines of code that you can program a strategy. You can control the frequency of the CPU inside your board. So high frequency trading means as higher the frequency that you have on your board, higher is faster is your algo, and faster is the execution of the trading, right? What I mean is, so okay, if I have a new market data that hits the board, and then I have a lower, smaller trade, right? Lower latency to process this input, and then I reply saying to the server, buy, sell, cancel the order, whatever it is, right? So the higher the frequency, faster you are reacting to new market data. Today, the high frequency trading got a broader spectrum, saying like that, right? Because these decentralized exchanges and also centralized exchanges are all over the world, right? You don't have a collocation. Some of them are trying to create that using AWS.
Yeah.
The, they can share like the AWS, the private link. But today is more on the automated trading, right? So if you can program and then, okay, I'm gonna do a program between the centralized exchange and a DEX, looking at the difference in funding rates, difference in prices, and then take advantage of this difference really fast, right? The automate. So below a second, you can be considered a high frequency trading today, especially on the crypto side. So there are opportunities. There are a lot of opportunities. The way the crypto was born, right? Was decentralized, right? The idea is to decentralize everything, and so that's why you have so many exchanges, so many DEX being built, and then you have a lot of opportunities between prices and funding rates on the future side. So there are a lot of opportunities. So the guys that wants to dive into the arbitrage trading, that's the time. That's the best time to do it. And I think that that's great for the market because we are still ramping on volume. We are creating more and more better environments to go out of centralized exchanges, and this is going to be the I think the big ramping volume for next year for sure. So who
Exactly.
wants
That
to do arbitrage? That's a time to learn.
Yeah, that's great. That's one of the reasons why we're hosting this futures trading class, and that's exactly your mission: onboard those users to DeFi. So yeah, thanks a lot for the explanation. Edson is sharing in the general state chat. Hummingbot Hummingbot is it's an open source bot for automated trade, which we will integrate with Zaro so you can use it. So if you're looking for arbitraging at futures access, take a look at Hummingbot and wait for our warning. Yeah. I think that one other thing before I jump to the next question, but one other thing that is worth explaining, it's about leverage. Because if you talk about strategies for trading perpetual futures, of course you got to talk about leverage. And one thing that is clear to me, since, for example, our last call with the community about trading, and that was with Jorge. You also know him from Traders Club. And
Yes.
one of the things I asked him, and I will ask this later for you, was about strategies and how to use leverage, etc. And basically, to summarize, he said, if you're new to trading, don't use more than 5 times leverage, like 5x leverage, unless you're on track. Otherwise, you'll probably lose money. So, how does leverage work? Basically, you can start trading perpetual futures and get leverage so you can get exposed to the volatility of an asset using a smaller volume. So, let's say you use 10 times leverage. You can deposit $100 and then you can expose your position to the volatility of that asset with the volume of $1,000 because you leverage your position in 10 times. But the thing is, um, what happens so you get liquidated? If you use 10 times leverage, it goes 10 times faster down as well. So let's say the
Hmm.
asset dropped 2%, then your position will be affected by 20%. So that's how you lose money quickly, unless you're going in the right direction and then you can make tons of money. So related to leverage and how it works in perpetual futures, I wanted to ask you, what should traders keep in mind when considering margin trading with perps? Because that's the only there's a difference between some dexes nowadays. Some dexes offer isolated margins, some dexes uses cross margin, like Zeros. We're starting off by only offering cross margin node that attracts a lot of advanced traders, but that might um, scare a little bit the initial traders. So, what are your suggestions to whoever's starting to trade and don't really know how cross margin works?
Hmm. Yes, basically, cross margin means that you're using 100% of your deposits to margin your position, right? So if you have a $1,000 there and then you create a position of $2,000 notional, right, in futures, and goes down by 50%, you are wiped out, right? You are done. If you have isolated margin, you can, okay, I'm gonna segregate $100 and then I'm gonna be 10 times leverage on that $100, but I won't risk the 900 left, right? So but basically directional trades, when you are leveraged, you need to be really um, picky on the leverage, right? Because you have your portfolio. Let's say that portfolio is $10,000. Okay, I'm gonna do on leverage. I'm gonna trade $1,000, and then you segregate $1,000 for the trading. But you are risking 10% out of your whole portfolio, right? Out of this $1,000, okay, I'm gonna do 2 or 3 times leverage to trade, to do directional trades. If you lose the whole $1,000, you still have 9,000, and then you need to do, you can work on, can still work, you can still trade, right? So basically, you need to be responsible. It is easier to say, it's really easy to say, but it is really hard to implement, right? Because basically, when people goes to soul trading, right, they're gonna live trading by the rest of my life. they want 10% per day returns, right? So it's impossible to do this without risking the whole portfolio, right? So basically, when you are confident of a trade, bear in mind that you won't buy the low, right? Or you won't sell the high. You're gonna buy at a price that I think there's gonna be is gonna be, is a lower price, right? It's a good opportunity, but it can go lower, and this is going to happen 90% of the times, right? If not 100% of the times. So it's important to bear in mind that the higher the leverage, easier to get out of the market, right? Because you're gonna lose the 100% of the money. And another thing to have in mind is the market is always correct. The price that you see in front of your screen, that's the correct one. It doesn't matter your opinion, right? The market is right. You're not right. So always try to be conscious on the leverage. Try to make this not one time bet, right? If you want to do the trading for living, I would say, okay, let's try little by little. Let's say, okay, let's put some targets. Okay, in 6 months, I'm gonna implement the portfolio. Say, I'm gonna start with $400. In 6 months, I put $300 more if I'm doing all right, right? So if doing good, if not, okay, let's read more. Let's follow people on X and see what they are saying. Learn, because it's a long run. It's not a short run.
Yeah, that's great. Um, I'm gonna ask you a question that is related to um, it's like a it's like an event. I don't know if I can call it like that. We have people that work on Daros and also people from our community that are partners of Keyboard, which is basically an alpha group. They talk about futures trading and NFT trading. It's a pretty cool community. And one thing that really got me excited about, because I think it's important for you to get your practice on, is that they basically created a collective goal. Like, let's trade every day, and this is the plan projection. If you hit like 1% a day or 2% a day, PNL with your bank. So, for example, one of the people that is trading there, it got me really interested because it's insane. Like the result for me, it's insane. He's been trading since November 6th until I got the data from yesterday. So he started with $900 and now he already made he turned it into $6,500 in like less than a month. So the average daily profit, it's around 16%. That's crazy. Like, I hope that doesn't happen to him, but he might he might start losing soon. So since you got into the subject of living off of trading, um, I know I'm gonna ask a little bit more about this in the next questions, but I just wanted to understand, like, as you said, you can't expect that you will get the lowest price and sell at the highest price. Um, like there's a Brazilian saying that is like, don't try to hit the ass of the fly. It's already hard to kill the fly. So yeah. So what would be the tip that you would give, like, for a person that is starting to trade every day, which I think it is a great thing to understand more about trading. Like, what is a good goal to have? Is it a percentage? Is it what is it? What would you suggest?
The first thing is not put yourself in an obligation to trade every day.
Okay.
That's a thing that if you are want to trade, you can. How can I say that? It's you can follow the market. You can sit down, put yourself in front of the computer, check the market, read. look for graphs. Okay, I'm gonna see some indicators, right? But if you don't find the right one that you trust, the right pattern that you trust, don't trade. Because the market is going to still alive, right? Maybe you are not alive, but the market is going to still there. So the next day we'll see. Okay, now I found the support that I want to buy. Okay, or the resistance, just hit the resistance level that I want to sell. Then you sell at the price that you are looking at. Stop loss always, put a stop loss there, and don't move the stop loss, right? Because
Don't
when
move the
you are
stop
moving
loss.
the stop loss, your emotions are moving with the stop loss, right? So you don't you have to control yourself, right? So at the moment that you set the trade and say, okay, I'm selling at 100 to buy back at 95, but I'm gonna do a stop loss at 103. That's done. That's deal. That's the way it should happen, right? You can move. Okay, the market went to from 100 and then went to 101 and 97, 96, and then you feel that the market is done by 96. Okay, you can move the profits because profits
Okay.
people that put the profits in your pocket never go to bankruptcy, right? So
Yeah, yeah, yeah.
you can move a little bit on the profits, but never on the loss, because the loss, when you set the trade, you have your mind. That's the best of your mind at that moment, right? So if you want to trade every day, sit on the market, sit in your share, open all all the resources that you have available, and then try to decide and see what is happening. Okay, I'm gonna buy here, sell there. And if the price is not going to your target to buy or sell, you don't need to do it, right? You're not obligated to do it, because most of the errors goes when you feel that you need to trade. Why not trade? Oh, I did just miss an opportunity to buy here. It's a hell in your mind happening right during this time. So if you try to
Yeah.
concentrate and see and try to and not try but learn a way that you feel confident, and then you can um, trade, and okay, I made the first one a good one, the second I lose, but okay, it's under the stop loss, I'm still alive, and then moving forward, you're going to learn that your emotions are always against you.
Okay. Great. Great. Yeah, Edson also shared uh, a good saying here. Never try to recover the loss in an insane position. Accept the loss, which makes total sense. The next question that I have for you is totally related to what we're talking about, and it is about your trading strategy. Can you give us an overview of some common trading strategies that you use in the market? Like, what kind of chart analysis do you usually use? Um, I'll ask
Mhm.
about like metrics you look for later, but I think that this question is really related to also, for example, what kinds of chart analysis do you do? And related to what we were talking about, like stop loss, how do you determine that, for example?
The stop loss for me is always half of the profit that I'm looking to. So if I'm selling at or buying, but let's say that the other example, right? Selling at 100 and I'm looking to close the position at 95, the stop loss has to be 102 and a half.
Okay,
For me, it's
cool.
pretty straightforward. There's no magic behind it, right? So you have to be, and you have to honor that. Of course, there are sometimes that gold move and the stop loss. Obviously, that's there's no perfect word, right? But you have to follow the stop loss as half of the, for me at least, of the profit that you are looking to, because you're not going um, to make it right 100% of the time, right? Or at least if you make it one right for two losses, you are zero, right?
But for
So
example, I'm sorry to cut
mhm.
you off, but like
No,
for
go ahead.
example, Um, I know that like a really common chart analysis methodology that people use is Fibonacci retraction, for example. Let's say you set up your Fibonacci retraction. You set up
Mhm.
the horizontal lines for resistance lines as well, and you realize that your stop loss is not like the half of the profit you're aiming for is not exactly aligned with the chart analysis that you created. So why did you define that half of your profit should be your stop loss? And do you use Fibonacci retraction, resistance lines,
Mhm.
trend lines, etc.? What do you usually do?
Yes, I like the Fibonacci lines because I like to be contrarian, right? So if the token, the crypto, whatever is going down by, I don't know, 10%, and then I see one of the candles that can sign a signal, right? A reversing trend. If I'm buying there, I trace the Fibonacci lines and see the 50% retracement, right? Line. If it goes
Mhm.
from like $10 price, I'm gonna see the lowest price that I reach, and I'm gonna put the stop loss at $2-3. I won't use the same 50% on the trading on the losses because you are this case you are using more. For me, it's much riskier, right? Because maybe you are trying to trade to get the lowest, right? The reversing trend, and then it's just a brief, and then goes down even further, right?
Yeah.
So for this case, that when we are using when I'm using Fibonacci, the stop loss is lower than the 50%. So if I'm going
Okay.
to profit, see $10 in profit, and I'm gonna put 2, 3 below the minimum because maybe it goes down further, and then I have to go back and see another opportunity on this trend to be a contrarian again because that
Yeah,
I
yeah,
still
yeah,
looking at
exactly.
the same the one time and any moment is this is going to happen, right? But
Yeah,
in this case, Fibonacci is really I really like Fibonacci, and then if you trace Fibonacci on the retracements, right? You see that the market is looking at it as well, right? So there
yeah,
are some supports and resistance that the market is really following.
yeah. Okay, great. Let me see. Um, I don't know if you want to talk a little bit about like cash and carry, futures
Yes.
between exchanges. Do you want to mention anything about that, or should I just move to the next question?
Yes, let's talk about the two trading strategies that I really like. The first one is old but gold, right? Is cash and carry. What is that? Basically, you have the spot market, the cash market that you say, right? That you the buy for example Bitcoin, and then you sell futures at the equivalent amount, right? If I'm buying one Bitcoin, I'm selling the one future contract, right? To grab the funding rate, right? So if you look at the historical funding rate for Bitcoin, it's from 11% a year to 30-40% a year in a bull in short bull runs, right? As we saw now in October, November, right? So this is money that we can grab, right? This is money that is basically is low, really low risk because we are looking at counterparty risk, not trading risk, right? Eventually, you are buying the cash or the Bitcoin, right? And then you are selling the future, and this can go even wider, right? The difference. We are delta neutral, right? So this is something that as the crypto market is decentralized, this is keep getting really good returns over the years, right? And we are delta neutral again, and you have ups and downs. So sometimes the funding rate is negative, and then you can unwind. This means when the funding rate is positive or negative, means that the price moved against the underlying, right? So the Bitcoin is again the 38,000 at the example at the beginning. You see the futures trading at 38,000, but the funding rate is positive. You sell the futures, buy the cash at the same price. If the funding rate is negative and then you want to unwind it, probably the futures is $50 below, not 50, but a 10, $15 below the cash. So you still have the price difference to grab as well, right? But again, this is a strategy that is for patient people, right? And not
Mm.
people that are looking to make a lot of money really fast. So, but it's a steady growth. I see this over the years makes the difference, right? First, that we are trading, so you are active in the market, right? We are not taking a large amount of risk; it's really low. As I said, it's counterparty risk, and you are making profits daily. So I think that that's the trading, right? That's what I feel comfortable with. That's
Yeah.
what trading means. That we are making money. We're not gonna buy a Lamborghini tomorrow, but in 10 years I'm gonna buy it, right? So I
Okay.
feel that if you are patient, you can collect more revenues and reinvest and make this grow and grow the pie, keep growing until you are comfortable to be a sole trader, right?
Yeah.
So
Great. Yeah.
that's one really like, and it's really good because it keep you active every day, right? Especially on crypto, I sit down on my computer on Saturday, Sunday, and there's no stop, right? And another one that I think that is really good, and I'm doing more and more as the DeFi volume is growing, right? Is the difference in funding rates. So, for example, in an exchange A, you have a Bitcoin that is the negative funding rate, let's say 0.1% a day. And then on the exchange B, you have the same Bitcoin futures, they're always perps futures, right? Trading at positive 0.02 per day. It's it's really easy, right? Sell the positive one, buy the negative one, and collect the funding rates on both sides, right? Basically, this won't happen exactly as I described it, one negative and the other positive, but you're gonna have difference between funding rates. One is positive 0.01 or 0.10%, and the other is positive 0.30%, right? So then you're buying the lowest rate and selling the richest premium, right? The more, and collect the difference in premiums. More the difference, better for the trades. And this you can keep rolling until the difference vanishes, right? And then you will wind the position. As I said at the beginning as well, if there is one rich premium on the funding rates, the prices is up compared to the index, right? Which calls the skew. With skew, you can see the difference in buyers versus sellers, right? So the prices on the Bitcoin, for example, is $10, $15 up compared to the index. And the other exchange that is trading by more regular funding rate is really close to the index. So also you can grab this difference on the pricing as well. So it's price difference plus funding rate difference. And this is a really good strategy. I recommend everyone to do that are interested in arbitrage to check it out and see how this develop over time, right? And again, you won't be rich overnight, but you can have a growth in the revenues for your own pocket, right?
Yeah. That's great. Yeah. Thanks. Those two strategies are great. Before moving on, I just want to share the password for whoever is here and want to get ahead of others in the Z-List sprint. So the password is PERT from perpetual futures, of course. So yeah, password
Mm-hmm.
PERT. Yeah, just send it in the chat.
Nice one.
Yeah. Next question, I think it's related to one thing that you mentioned about risk management. So,
Right.
of course, you know that risk management is crucial when trading. So, how do you approach risk management specifically when trading perpetual contracts?
Yes. So there is a big difference when you are trading delta neutral strategies like arbitrage strategies and directional trading, right? So let's go back to arbitrage and what I do. I see if I'm trading Bitcoin and if I'm going to leverage 10 times each exchange, right? So if I have $1,000 in one exchange and $1,000 in the other, and then I'm gonna make a $10,000 position each side because I'm delta neutral, right? So I'm not running the risk of the crypto itself. I'm running the risk of overnight risk. So when I go to sleep, shut down the computer, and then when I wake up, I don't want to be wiped out in one side of the trade. So I consider that 10% variation overnight is as a good risk for my trading. At the same time, I set a cash in my wallet. So if I need to, when I wake up, oh Jesus, the Bitcoin is going up almost 10%. I need to fund one of the exchanges. I have some stable coins in my wallet to fund right away one exchange. If I'm trading other cryptos, I go 5 times leverage or less. If it's too new, it's a meme coin, something like meme coin, right? Something like that, 3 times, 2 times, or no trading. Because this can go up or down 20%, 30%, and then
Yeah.
you cannot have time enough time to cover the loss of one exchange to move the crypto to one side to the other, right? So what I do is 10 times in if it's Bitcoin or ETH, 5 times for the others. If it's too low, if the liquidity is lower, even less, 3 times or two or no trading, right?
All
When
right.
you are talking about directional trades, when you are taking risk, okay, I'm gonna buy Arbitrum because I like this is going to go up, the market is going up, blah blah blah. I set a leverage. You can set a leverage at 10 times as well, but on the part of the portfolio, they are taking more risks, right? As I said at the beginning, you have 10,000, then you split to $1,000 for futures trading, and then okay, for this bet, I'm gonna set $100 or $200 loss. Because basically, one of my rules is when you're taking directional trades, you cannot take more than 5% down because it's really tough to get the money back, right? And so my what can I say? Okay, one of the rules is never take 5% down. Always cut the losses before, right? So I think that's the way because the trading is a survivorship, right? This is something that you need to survive for the long run. So you cannot be shot at the first trade, basically.
Yeah. Okay, that's great advice. We had a question from the audience here about the
Okay.
funding rate. So, can you ask Henrique what he values the most when analyzing different markets for funding rates? Is it predictability, stability, adaptability? For example, how much do you think that short-term volume should be considered when computing funding rates, regardless of the skew?
Yeah. So when I like the on the Arts market is when you have more stability on the funding rate because if you go inside, you start a position on the exchange A versus the exchange B, and then you are targeting 0.02% or 0.0 or a little more, right, for the funding rates per day. If I have to unwind the position 2 hours later or 1 hour later, I didn't have time to capture the funding rates to cover the costs, right? So stability is important for this trading, right? So what happens in some exchanges is that the math behind it, the funding rate calculation, right, make this fluctuates too fast, and then we don't have time enough to make money and be profitable with this strategy. And the other part of the question was when I computing the funding rates, right? So basically the stability. I think that this is the most important thing for this arbitrage, right?
All right. Cool. Yeah, that's great. And like in your personal case, like we were talking about isolated and cross margin modes. What do you usually trade with? Cross margin or isolated margin?
So for me, as I'm basically an arbitrage trader, I prefer cross margin because I'm not looking to leverage to get a directional trade, right? So for
Uh-huh.
me, cross margin is easier because I have the I set the funds in different exchanges, so I know exactly how much money I have in each exchange, and I don't want to have a liquidation on one asset in one exchange because of isolated margin, right? So I want to have the whole money and I know how much notional value I have in each exchange, and I can control that uh, easier. So for arbitrage trading, cross margin. If I'm doing directional trading, it's better isolated because then you set the amount of risk that you want to take in that bet specifically.
Yeah. Yeah. Makes sense. Cool, great. The next question that I planned out to ask you is about key metrics that you look for. We talked about chart analysis strategy earlier, and now I'm talking about, for example, RSI. For those who don't know, it's relative strength index, volume, trend lines, etc. What kinds of key metrics do you usually look for when you're analyzing, for example, Fibonacci retraction?
Yes, I like the Fibonacci one because I like to be contrary on the short-term trading, right? So when it's going down too fast, usually when it's going down, when it's going up, I don't like to be contrary. I like to be riding the trend.
Yeah.
But when it's going down too fast, I'm looking for Fibonacci, especially when we have a candle of the reverse trend, right? And on the when it's going up, let the profits run, right? Basically, I think that most of, if not everyone here, are bullish in crypto as a whole, right? So why are you going to short? So basically, let's look at when it's going down too fast. If something's wrong, is this liquidation? Is short-term activity, right?
Hmm. And do you usually look for, as I mentioned, RSI, or you don't usually use those metrics?
No, our side is really tough. Because nothing that is going down or up and then the reach like the 30 and 70s, right? It's basically of the buying below 30 and sell below 70s. This doesn't mean that it's not going to go down further or up further, right? So I think that RSI that is not, you cannot just trust in just one, like RSI, for example. I like train lines. I think train lines are really good. The crypto is a trained asset class. It's like the masses move ups or down, right? So trend
Hmm.
lines are really good. And for short-term trading, always Fibonacci.
Okay, great. Thanks for the tips. The next question is about how do the available liquidity on Prosdexes impact the prices, the volatility, funding rate, etc. Like, what should a trader take into account when deciding where to trade at? Because I remember that when we were talking about that you started
Hmm.
arbitraging through, for example, Vertex, HMX, Quinta, and also that other centralized exchange that I don't recall the name, but um, how the available liquidity impact the price and the other parameters that I mentioned. Because one of the core value propositions that we're excelling for to solve and Zaros, it's about being more capital efficient with the liquidity that we attract. So how does that impact the prices, volatility, and funding rate?
Yeah, so the first thing that I look on the when I'm looking for a DEX, right? It's first is let's take a look on the volume traded in the past 3 months.
Hmm.
If it's consistent, or if it's growing. Let's look the partnership that the DEX has, because then we are looking also not just trading, new trading DEX, right? But also your money is gonna be there, right? So you need to know if this if it is reliable, right? If it was well built. And also take a look on the community and the Discord X. Let's see how many followers they have. If they are live on Discord, right? If there are people talking about, right? Chatting there. So all of this is not 100% sure that it's going to be profitable one, but at least you see that there is a work behind it. There is a good intention to, okay, let's build this and make this a great exchange, this kind of vibes. And on the trading side, okay, I just analyze, okay, this is a good one. Let's take a look on the trading and send some money. Let's see if there are opportunities there. If there's no trading, like a good volume of trading, like I don't know, like $7-10 million per day, you won't have opportunities enough. So when you set cash to one exchange, you need to think that you have a target, not a target, but at least you look at your P&L, right, and your uh, return. Okay, I have 0.02% per day, right? And then I set some cash on this new exchange and did one trade on Monday, and until now, nothing. So we are losing, right? We are losing time, right? And if you're, yeah, because this cash is not uh, um, returning the same amount of the same return of the others, right? So it's important to look on the trading if there are opportunities, and if there's not, you remove the cash and take a look because this maybe is just a moment, right? If you
Yeah.
analyze that, okay, the exchange is good, okay, let's keep an eye on it.
Okay, great. Yeah, makes sense. And when looking to like in those several possibilities of where to trade, uh, what what special features do you look for? For example, the last time we talked about it, you said that for arbitraging, you usually just take a look at the funding rate. But for directional trading, what features do you usually look for?
The features that I'm looking at first is the slippage. The slippage is really important because this is money in the end, right? Because when you are trading, okay, I want to trade $100,000 of Arbitron, right? And then when you place a trade, and then you see a 0.005% slippage or 0.07 or so many so much slippage, right? In some exchanges that okay, something's wrong, right? I'm trading at an exchange that maybe is cheaper on the commission side, but you pay the difference on the slippage and this price difference. So this is really important because if you add up over the year, it's a lot of money that you left that you just left on the table, right?
All right.
Uh,
And just
Sorry.
before you move on, what's like
Mhm.
the range of slippage percentage that you think is acceptable for the traders in the audience to look for?
For Bitcoin and ETH, I would say that it below 0.01%. For the others, if talking about $100,000 trade, right? Notional trade. For the other tokens, I would say 0.03 the most.
All right. All right, great. Great. And yeah, please go ahead with the other things you wanted to mention. I just think it's worth
Sure, sure.
mentioning so people understand, okay, what should I look for?
And also, it's important to know the commissions that we are paying, right? Because this is important for the long run. Um, if you, there is like one thing that I like is one click button for to close the position. Because
Mhm.
especially on arbitrage, you know, because you don't want to click a lot of things, right? You just want to close out, right?
Yeah, one
Independently
click trading.
of what's happening, you need to get out.
Yeah.
So this is really, really important. And also, if
Okay,
you have
great.
cross margin, if you have isolated margin, those options are really good. You can, if you can set up the stop loss and profit taking, it's also a plus, right? The those are really good to see it.
Okay, great. Um, yeah, Edson added that it's a great point regarding slippage because several TXs and indexes hide fees inside the slippage fee. So yeah,
Yes, yes,
that's good
that's
to
very
take into
true. And
consideration.
a lot of centralized exchange has, um, let's say, that market makers behind it, and then you are seeing one price and then get a field in another price, right? Is a higher or lower. If you're buying, is higher price or lower. If you are selling, sometimes you have some hidden fees, not non-disclosure.
Yeah, exactly.
Yeah.
All right. We only have two more questions. I know it's already 1 hour of talk, but yeah, let's move on to
Mhm.
the two last questions. So, for those who want to live off of trading, particularly in the perpetual contract space, what advice would you give them to maintain consistency and more importantly to achieve the necessary profit to be able to do so?
All right, that's something that I'm still learning, but it's important to mention. First is be patient, right? You don't need to be like really profitable at the first trade. If you make money in the first trade, then in your first trade, it's lucky. Yeah, yeah, trust on that. The second thing is that you need to give yourself time to learn, right? So it's not something that okay, I start to read about crypto, I really like it. Now I figure out that there are perhaps futures that can leverage 100 times my cash, right? And then I'm going to start trading, and I'm gonna live on that. Wait, always patient. Start trading. Start to learn. Read everything. You're gonna read a lot of crap, right? And but to figure out that it's a crap, you need to read, right? You need to read a lot of things, right? So time to learn is not a one-day job, like just learning today or took a course of a week and now I know. No, you don't. I still learning. After 20 years, I'm still learning to control myself, right? And learning about the opportunities in the market, right?
Yeah.
I think the third thing that is really important that is, I think that is a meme in the market as well, is don't quit your job to engage in soul trading, right? Because if, if you have your job that is paying your living costs, you start from a point, right? From a good point. Crypto is 24/7, never stops. So you can do as a side job. So start learning, trading a little bit, talk to more people, know people that are trading also. Give yourself time. Then when the revenues that you have is steady and really over the money that you are making on your job, then you can start to think about it, right? Because you don't need to. If you have multiple income sources, why are you gonna give it up, right? It's much better have two, three income sources than just one, right?
Yeah. Great.
The other thing is that we talk about this over today, right? Is you have to control your leverage. Trading is a survivorship game, so you need to be alive to see the next day, right? So
Yeah.
control the leverage. Don't lose 10, 20% on one single trade because it's going to cost you a lot of trades, a lot of good trades to recover that. So don't lose more than 5% in just one trade, because this consumes your mind because of the mistake, and probably gonna put yourself in more risk to recover the loss. So 5% is a lot of money to lose, right?
Yeah.
And now I don't want to be just give bad news, but let's another thing. If you have your portfolio X amount of dollars, if you can live with 5% annual return, okay, then we can try to look to just trade for yourself, because
Yeah.
you have your cost of living. You need to trade. You're gonna put yourself in a way that you have to trade, not every day, but you have to trade to make money, right? So this is not good for your mind. And you need to remember that Warren Buffett is well-known investor, right? But he's making 22% average annual return. But he's doing over 60 years, right? So consistency is the key. And if you're getting more than 20% a year, you are doing really, really well.
Yeah, that's facts. It's something like, yeah, you're talking about 5% a year. The example that I mentioned in the beginning of the call was 2% a day. So yeah, it's a pretty unrealistic goal
Yes,
to
it's
compare
tough
it
because
to.
you can make it's going to happen, right? You're going to have a really good months and really bad months, right? But the consistency is the key. So you make 2% a day, you're probably what's going to happen. You're going to increase the leverage because you're making money, right? What can go wrong, right? Nothing can go wrong. You're making money for over 2 weeks, and then you
Yeah.
increase the leverage. The first or the second bad trade, wipe it out, the whole profit, right? This happens. This happens. But it's really tough to get 2% a day trading in directional markets without some advantage. Saying that okay, I know the flow, I know something about the flow, I know difference in prices between exchanges. I'm doing some kind of service instead of trading directionally, or I'm market making options in one exchange, and I'm being the big one there, and there is a lot of retail flow there. That is really tough to be on directionally. Okay, I have the trading system that is working perfectly. I never saw so. That's why I don't believe in magic trading.
Yeah, fair advice. I think the last question, so we can wrap up everything, is about recommended authors and trading strategies that you would advise people to take a look at, to some
Mhm.
books to read. And I also have a specific book that I want to get your opinion on it. But yeah, please, first of all, just share some
Yeah,
if
so
you have
one guy
any.
that I'd like to follow is Brent Donnelly. He was a trader at Deutsche Bank for many years, and then he founded Spectra Markets. So he talks about almost every day about markets, but traditional markets. 1 year ago, he started talking about crypto, but didn't. But he stopped, right? Probably because the problem with crypto is that you have bear markets and bull markets. At the bear markets,
Yeah,
nobody wants to know, right? And then in bull markets, everybody wants to know what's happening. And then in the bull market, if you're not well positioned, it's done, right? So I really like this guy. I think that he's consistent. He gives trades idea every week, almost every week. So he's a guy that he put his skin on the game, saying like that.
okay, great. Yeah, that's awesome. And any books that you would refer to?
Yes, yes. Let me just place here on the chat. He
Oh,
has
okay.
like an almanac, a trader almanac, where he got during 1 year he got 50 trading ideas and real time, and start to explain the rationale behind it, right? What he was thinking before doing the trade, and what happened during the trade, and if it was stop loss or a profit, right? And it's really good. I think that is really good because shows how your mind plays during the trade, right? Which is the most difficult thing. A sole trader, right? Because you're alone, all alone, right? When you are trading. So this book, I really like it. It's really good.
Okay, that's great. And one book that someone referred to me once. It's a book from a Brazilian author that I don't know if you're familiar with, but the book is Candlestick from Carlos Alberto de Bastiani. Do you know it?
No, no. Send me the link and then I take a look.
All right, yeah. It's just like out of curiosity, so I'll send it to you
Mm-hmm.
later. Guys, I think this is it in terms of questions that I had to ask Henrique. Do you guys want to ask anything? Do you guys want to share anything before we wrap up? Just please send it in the chat, and then I can uh, proceed. I'm not sure if
No,
anyone is going to
question.
ask anything else because because
I
people
think that you talk a
started
lot.
asking. Yeah, no, but they sent a lot of questions while we were talking. So yeah, maybe we already answered most of them. So
Mm-hmm.
I don't know. Anyone from the team want to ask anything? Because I know some of you are starting to trade. So any questions or that's okay. Well, oh, someone is asking something.
Mm-hmm.
There's the. Uh, was there any moment that you really had a key change mentality for trades? Like that's a good question. Like an insight, a moment that changed the way you looked trading.
The moment that changed the that I changed that, maybe if it's a long term trade, this happens more with the traditional market than crypto. If I am in a trade and then some key macro condition change it, then I can change the how can I say the vision of this trade. Okay, I'm gonna buy a stock or an index, and then okay, the some economic releases goes against it, right? And I'm long in the market, and then you see more inflation, for example, and then probably the market is going down because of that, because they are seeing the interest rate going higher. Then I can change but on my mind, if I change during a moment, it's 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 rare. Usually, if I'm changing my mind during a trade without a macro condition or any external condition, is because I'm emotionally engaged with the trade. So it's the
Hmm.
best way is to close the trade and drink a cup of water.
Yeah. All right. All right. Makes sense. Makes sense. Yeah. Yeah. I think maybe Yassine is sending a question. Let's see. Otherwise, let's wrap it up. Yeah. Uh, Oh, yeah. All right. It was about the something else. So yeah, Henrique, thanks a lot for your time. It was
Sure.
great. At least I learned a lot with you today, and I'm pretty sure many others did. Thanks a lot for coming in. We recorded the call, so we will be sharing some insights not only on Discord but also on Twitter. And yeah, thanks a lot. Do you want to say anything for the audience before wrapping up, or
No, I think that we cover 100%. Just be patient, and the profits is going to build.
all right, great. Thanks a lot, and we'll see you soon.
Thank you.
See ya.